Hey everyone, welcome to a video that I'm going to be doing on the S&P 500. I'm going to be not doing any analysis on the price of SPY or the S&P or anything like that. What I want to focus on with this video is what quadruple witching is. I also want to do some analysis on options open interest. And kind of go through that and basically, of course, before I get into any of this, this isn't financial advice. I'm not your financial advisor. You are responsible for your own trades, managing your own risk, doing your own research. I'm just kind of giving my opinion here. But of course, this is all surrounding June 19th, which it's like the buzzword these days. You know, it's the quadruple witching, and some people may not know what that is. So I just kind of want to talk a little bit about what it is. And let's go ahead and just kind of dive into it. All right, so I'm going to talk about what I've got here on the chart, but first let's just talk about what quadruple witching is. So it's a date, right? The quadruple witching right now is going to be on June 19th. That's a date when stock index futures, so we're talking about SPX futures or the ES futures, the stock index futures, stock index options. So we'd be looking at like SPY in this case, stock options, and single stock futures expire all at the same time. So quadruple witching is when the expiration occurs on all of these things. So when we're talking about options, of course, there's a couple different ways to close out of a position in options. You can sell your option to buy or sell at a specific strike. You have the option to let your contract expire and exercise the option. So if you have a call on, say, SPY at 280 and the price is at 320, well, then you basically have the option to buy that particular asset at 280. So you basically are able to exercise that option, get it a lot cheaper than what the price currently is. And of course, you have the option to let your contract expire worthless, and that's what we don't like to happen, but it is ultimately what the goal is for the market makers. Now, when we're talking about index futures, this is not like options where they don't necessarily expire worthless, but they can expire for less or more than what you bought them for. And in this case, we're talking about June 19th. So what I want to take a look at here is what the open interest looks like on the S&P. Okay, what has been fueling this rise in price? I think there's a number of different factors. I'm not going to talk a whole lot about analysis of this, but let's just take a look and see what things look like. So, on our Discord server, and of course, if you want access to our Discord server, I'd be more than happy to get an invite out to you if you want to have access to it. Just throw in a comment here in the YouTube chat. I'll be more than happy to get an invite code out to you. It doesn't cost anything to be part of our community. So let's just take a look here. So back on May 6th, 67% of all of the 6.1 million contracts of open interest were bearish. And so that would mean that on May 6th, throughout all of this time period back here, people were buying puts. Okay, and based on the volume that we were seeing, there was a ton of volume back here in this particular range. We'll call it the range from between 2712, 2713, and down here, of course, all the way down to the bottom at, we'll just call it 2200. So back here is I'm willing to bet when a lot of these puts were generated. Going back a little ways, this was when there was a lot of greed in the market, a lot of euphoria. We had basically the gap of recognition here, which is an important gap that hasn't been filled yet. I think it will over time, but basically this huge push down was basically our first sign because it was a significant pull down. It was a 3.35% pullback in the market. Of course, you could argue that some puts were generated in this range right here. I would be willing to bet that the majority of them were generated much lower than where we currently are today. So a lot of those puts are guaranteed to be underwater. Even if you bought a put that was crazy in the money, maybe you got, back down here, you were getting some puts that were at like maybe 300. We're talking about SPY here. You probably paid a pretty penny for them, and you're probably not going to see a return on those, even if we did pull back down to these levels. If you got puts back here, the price would really need to severely decline in order for you to be making money on those. So right now, here we are, 67% on May 6th were puts. And of course, the price at the time was about 28.48 on the SPX index. So 6.1 million contracts of open interest. And we fast forward a little while. So we fast forward about a week to the 13th of May. Still 67%. The price is lower, and we have increased by about 200,000 contracts of open interest. And the price at the time was about 28.20. And it was about this range where I was talking to people in the Discord that we would be expecting this to be a 1, 2, and an accelerated move down for the 3, and that didn't happen. We had a crazy absorption in the market, and I was talking at the time like we're not going to go down. We're more than likely going to be heading up, and that is exactly what we've been doing. So fast forward another week, we go forward to the 22nd of May. And here we are, still 67%. We have increased open interest on shorts by 300,000 contracts open interest, and we have increased the price by about another $22. So we are now, I'm talking SPY, apologies, so that would be about $220 here. So we're at 29.55 on the S&P index. So the price continued to move up. Open interest is still rolling up. We're still 67% bearish. Okay, so we're still heavily bearish, but again, the majority of those contracts either opened over here, and as the price moves up, sure, there are some calls that are opening here that is keeping the balance at about 67% to 33%. Okay, so that is still the case. Now the price has a rapid incline. So rapid increase on the price went from 29.55 all the way up to yesterday's high. So this would be a high for this quarter, right? A high for this quarter went as high as 32.33. And the day before, we had 7 million contracts open interest, still 67% bearish. And the price, of course, at the time was about 31.93, so we can call that 3,200, close to it. Basically where we are today. So we are actually seeing, and I'm using very general numbers here. So two trading sessions ago, so this would have been on Friday, we had 7,019,698 contracts in open interest on June 19th, which was 69% bearish, 31% bullish, and that was on 6.5. I need to update this. This says 67%. It was actually 69%. So we increased our bearish exposure up here at this price. And today, we have actually seen a decrease in open interest. We are 70% bearish, 30% bullish, and we have 7,015,474 open interest. So we've actually seen a decrease in about 4,000 contracts, which is not significant. We're still heavily bearish, and the majority of these bearish puts were generated back here below 3,000. So are we going to see a rug pull? I would argue to say that, the price is probably going to go down because 30% of this is bullish, and it is probably in the market. It wouldn't surprise me one bit to see some profit taking after what we are currently seeing in the market right now. It's not significant. It's not a significant pullback, in my opinion. We really need to see a crazy sell-off. We need to close below 3,200 on the day, in my opinion, to see a further sell-off tomorrow. Now, the next 10 calendar days, which, we're talking 10 calendar days, we're really talking about a week and a half. So basically the next 2 weeks of trading days for us to get to the 19th, which is next Friday. we really have to see some significant push down, in order to get the max pain on the market. It's going to be really hard to really determine where the price is going to go, but the max pain for all of this time period back here was to push the price up, and that's exactly what had happened. If you were in any puts that were profitable, you are more than likely severely underwater, because you should have taken profit back here. And just when you're in a position that's in a point where it's in significant profit, you need to take that, and don't be greedy, because typically when you as a normal retail trader are starting to get greedy in a position, that's typically when you should probably be selling that position. You should be getting out. So just putting that on the table. Don't be greedy. If you are in a position that is in crazy, crazy profit, there's no harm in taking profit at that level. Even if you leave some runners, there's no harm in leaving runners on the table, but you should cash out as much as possible, especially when you are in a position that is severely in profit. But nonetheless, what I'm seeing here is I'm seeing a whole bunch of open interest that is bearish, and it has been bearish since May 6th. So if we take this as a baseline, 70%, 67%, sorry, 67% in this area was bearish. So most of the time, also, when retail buy options, do they buy options that are in the money or out of the money? Retail buys positions that are out of the money, because they don't want to spend a whole lot on it, because they're looking for the positions that really get them significant gains. And there are people that are going to profit off of these positions. Anybody that bought calls back here, the 30%, 33% that bought calls are in significant profit. Now, the profit taking that we have seen today, are these puts opening new puts, or are these calls that are taking profit? And yeah, I guess I shouldn't say it that way, because options don't move the price. It's really the the underlying asset that moves the price, and the buying and selling there. But nonetheless, we're seeing a decrease in the amount of open interest in the 619. So more than likely, these positions are rolling to a further out expiration on their options contracts. But the real question is, are the calls taking profit, or are the puts increasing their open interest? In my opinion, what we're seeing calls closing their positions, because again, back here we saw 67% puts, now we're seeing 70% puts. But we're seeing decreasing open interest, while we're seeing an increase in the percentage spread on puts. So my bet is that calls are closing and taking their profit, and the puts are still holding on for dear life, that the price is going to go down. And it probably will. It probably will. But for these 67% that bought back here, they need this price to go down to like 280, 270, 260, and that is simply not going to happen before the 19th of June. It's just not going to happen. These contracts are going to expire worthless, and the price can come back down. It can even come down below 3,000. It can come down to 2,950. All of these puts are still going to expire worthless if that happens. So is there going to be a rug pull? Very possible. Very possible. I still maintain we need to close below 3,200 on the daily in order to see increased acceleration to the downside. I don't think we're going to see significant downside until after this quadruple witching is over, after the futures expire, after these options expire, after the index options expire. All of these different things that are going to be expiring on June 19th. I think we're probably just going to kind of move sideways in this range. And what is that going to do to options? If you're an options trader, you know that when the price moves sideways, options decrease in value over time because of the time decay on options. So people are looking for a rug pull. People are looking for the price to continue to go up because of the open interest. I say we're going to be moving sideways, and it's going to be a boring range for the next week and a half. And at that point, when June 19th rolls around, then we're going to see some increased volatility. I'm not saying then we're going to see a rug pull. I did not say that. I did not say then the price is going to skyrocket. I didn't say that either. I'm simply saying that the increase in volatility is likely going to occur after the 19th, and that's just what it is. If we start closing a daily below 3,200, then I say that we can probably see increased movement to the downside. If we see ourselves overtake the high from yesterday at 32.30, then I say that we can probably see some increased volatility to the upside. Maybe we go to fill this gap up here. We just don't know yet. We don't know yet. What I can say right now is that we have seen a 47% increase since the low in March. And that's pretty significant. I know individual stocks have done much better than this index, right? Their transportation stocks have gone up 100% and have dropped and gone up and gone down. But the index, the S&P 500 index has gone up almost 50%. And I don't know how much longer that can continue before we do see a pullback. Back here in this range that I've outlined, we see, down, up, down, up, down before it moves up. That is very likely what can happen here. We could come right back down here to 30.70, 30.80 down here in this range, down, up, down, and then it can finally move back up. I don't know if we're going to see prices back down here in this range between 2,200 and 2,400. I don't know if we're going to see that again. It's possible. But again, as long as we can continue to close above 3,200, and really I'm looking for a closure above 32.10. If we can close above 32.10, then it's not really a sell for me yet, right? This isn't, I'm not interested in trying to catch the top here. I'm just kind of just waiting for things to happen. All right, so again, I didn't want this to be a price analysis, so I'm just going to go ahead and stop here. But of course, if you guys have any questions or anything, feel free to hop in the Discord and ask away. If this video did help you in any way, shape, or form, like, subscribe, share, tell your friends, all that good stuff. If you want to be part of our Discord, again, it doesn't cost a dime to be part of our community on the Discord. Just throw in a comment here in the YouTube chat. I'll be more than happy to get an invite code out to you. And of course, wherever you are in the world, I hope you're having a good day, a good night, a good evening. Stay happy, stay healthy, and take care, everyone.